Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope you're having a great weekend. Last week we had the CPI data out of the US, and my word, what a sell-off in the DXY. A 3 standard deviation down week on a closing basis. And the good news is it has brought in a number of opportunities into the markets this week after we've seen opportunities drying up as the markets have been correcting and contracting. So there's lots of good markets setting up for next week. Okay, so quick look at the economic calendar. There isn't too much to look at, but last week it was this CPI reading that did cause the big sell-off in the DXY. Came out better than expected on both year-on-year headline and also core CPI. The headline month-on-month, which is actually more important than the year-on-year, didn't actually change though. It was better than expected, but it didn't change. So there is still quite a bit of work to be done here in terms of inflation, and unemployment claims came out still fairly tight. So I don't think we're going to see the Fed pivoting anytime soon. By that I mean cutting rates. I do think we've seen peak Fed hawkishness. In fact, I think Jackson Hole was pretty much peak Fed hawkishness. They are going to slow interest rate hikes, but I don't think we're going to see a pivot out of them anytime soon. Still more work to be done in terms of inflation. And if we jump to this week, there's not too much going on this week. We do have some CPI data, but nothing we really need to plan for in terms of short-term trading. Yes, it can bring volatility, but it's not really anything that I'm looking at here that can change the trend in the way that the CPI data did last week. So pretty clear run at the markets in terms of news this week. If we have a look at the scores for the coming week, the good thing is we are starting to see better signals coming into the market now. Last week we had a bit of a problem because everything was kind of neutral and the yen, which was weak, was kind of moving this way. So opportunities were drying up, especially into that CPI print. Now it's taken place. It does look like there's plenty of good setups heading into next week. And remember, we only need to catch a couple of good trades net to actually make some money. So going into this week, it is noticeable that the US dollar is now in the negative side of the scorecards for the first time in a long time, but it's not extremely negative here. And the two best shorts to the downside as it currently stands are Aussie and CAD. You can see we're still not clearing the upper or lower bound of the bullish and bearish numbers here. So above 2 is when you start to get a strong bullish or a bullish bias. We're very, very close to these levels, and below 2 obviously a bearish bias. Very close to these levels. So these two markets here I would favor to the short side, Aussie and CAD, and to the long side it would be Euro and also the Swiss franc. It is noticeable, like I said, if you look at the scores here, commodity currency, commodity currency, commodity currency, Swiss franc, safe haven asset, Japanese yen. And the euro, whilst not being a safe haven asset, compared to the New Zealand dollar, compared to the Canadian dollar, and compared to the Aussie dollar, does actually rise in risk off. So actually what you're looking at here, and this is just one of a number of signs that DXY sell-off last week has not translated into a wider risk-on appetite. In fact, if anything, we are seeing moves towards risk-off despite that sell-off. So something very important to note in the data as it currently stands, we should be extremely careful of translating that dollar sell-off into a wider risk-on sentiment. Okay, so looking at the markets, you can see there are many more setups here, and they actually look like good setups compared to last week and the week before that are now coming into the markets because of this volatility. Remember, volatility brings opportunity as well as risk. It also brings risk, but without risk, there is no opportunity. If markets just don't move, sure, there's no risk. You can't lose anything, but you can't make anything. So we need volatility to bring us risk and reward. And we have started to see quite a lot of volatility off of that CPI data. Starting with the individual currencies, you can see the DXY took out both targets to the downside last week. The next target to the downside is the 104.64, but just bear in mind, these moves are so sharp that I would not be surprised to see maybe at the beginning of the week at least a day or two of this snapping back or pulling back, maybe Wednesday, Thursday, maybe Tuesday, Wednesday, maybe Monday, Tuesday. So if you are looking to be short dollars, and this is why I haven't highlighted these in gold per se, because A, the dollar is only -1, which is bearish to neutral, but I also think we could snap back a bit because of how sharp this sell-off is. So if you're looking for dollar shorts next week, I do think we come down a little bit further, but just be wary. Don't look at selling this right at the low because this could snap back in your face. Next is the euro. Took out the target that I was looking for to the upside last week and then exploded through. As it currently stands, the euro has pulled back to retest the major breakout level of the 1.0375. So we're still in a downtrend. This is essentially a bear market rally as it currently stands. And we're right at an extremely significant area of previous support turn resistance. So again, I question whether, because of how sharp, very often when you have resistance, the price action leading into a resistance very often will give you an indication of whether it's going to fail or succeed. Very often, if you have a steep move into it, that actually can be or is generally more likely to actually turn at that resistance area, as opposed to if it comes up like this, for example, consolidates underneath it, that's when you can have a better chance of actually breaking through. So be a little bit wary of this. I wouldn't be surprised to see this market, the euro, for example, snap back over the next day or two, whether it's Monday or Tuesday, or whether it's Tuesday or Wednesday, who knows. But I do think we could see this snap back a little bit, even if we are going to continue higher. Overall, though, the euro is still in a downtrend. Next is the pound, still also in a downtrend. This is, as it currently stands, a bear market rally. And I am looking for the 1.20570 in the pound. That's the next key area of resistance to the upside. Next is the Swiss franc. Now, I tweeted this out amongst other things that you can see over these last 2 days, the Swiss franc has rallied 5%. To put that into context, it sold off or was down 10% for the entire year leading up to 2 days ago. So we had an entire year of Swiss franc moves resulting in 10% to the downside, and we recovered half of that, or 50% of the year's move, in 2 days. These were astronomical, outsized moves we've seen in the Forex market off of that. So I am overall bullish on the Swiss franc. I do think the Swiss franc pairs are actually setting up to be one of the better opportunities next week. But just bear in mind, we may get a consolidation first. Next is the yen. Now look at this. The yen was up 6% on the week. I also tweeted this out. The last time this happened was in October 2008, during the midst of the global financial crisis. So to see the Swiss franc recovering half of its entire year's move, and the Japanese yen trading in a way that it hasn't since the 2008 global financial crisis, actually during the crash, these are actually moves that make me a little bit uneasy. And again, we should be extremely careful of translating that DXY sell-off into broader risk on sentiment and a bottom in stocks. That would be my opinion. I do still think the DXY is heading to new highs, despite the fact it's been volatile and we had that sell-off last week. Next is the CAD. We are again just simply in a bear market rally. Here's the previous high. Here's the previous low, and in fact, we could be coming back up to test this now. So I do think we see further advances perhaps in the CAD if the dollar comes down a little bit further. But ultimately, I do think the dollar makes new highs, and I do think the Canadian dollar makes new lows. And it could well be the case, now that we're seeing these moves in the Swiss franc, in the Japanese yen, it could well be the case that the next up move in the dollar is from the end of the stock market move down, essentially a stock market capitulation, which sees safe haven assets rally like the yen, like the Swiss franc, like the dollar. Aussie dollar, we are still in an overall downtrend. Again, don't mistake this as it currently stands for a new uptrend. It is not. It is a volatile counter trend rally. Bear market rallies are often very volatile. And we have taken out the previous low here. We're testing this. Now, with this very, very sharp extension, I would not be surprised to see this rolling over and correcting somewhat. So the next target to the upside is 0.68570, but just bear in mind, we are probably still going to see this rolling over to the downside at some point as the DXY starts to find a bottom and heads back to new highs. And the final currency here is the New Zealand dollar. Again, back to the previous lows. We are simply still in a downtrend, and this is just a bear market rally. I do think we could continue a bit higher as the dollar comes down a bit lower, perhaps to the 0.62280. However, I am anticipating this in the near future to start to roll over back down to the lows. Okay, so let's look at the markets themselves, starting with crude oil. And the first thing to notice is we took out the target set last week almost to the pip at the 93.75. Coming into this week, I do have a bearish to neutral bias on crude oil. And we're starting on the daily chart here because I want to show you something. As it currently stands, we have a failed inverse head and shoulders, failed last week. We got the sell-off. And on top of this, that sell-off created a smaller head and shoulders to the downside. So we are actually at a point in crude oil where we can go either way, and the next move is likely to be quite explosive. However, as it currently stands, because we have a failure and we have a newly developed, although not confirmed, head and shoulders in crude oil, this is actually bearish. And if this breaks to the downside and the next move is explosive and it is to the downside, that is risk off. That is not risk on. It's another piece of information here which shows me we have not yet seen a broader risk on sentiment coming into the markets. So if you drop to the 4-hour chart, you can see this a little bit better. Here is the developing head and shoulders. Here was the failed inverse head and shoulders. And I wouldn't be bullish on this unless we could break above here with momentum. We started to do this and pull back. That would be when I would start to look for long positions in crude oil. As it currently stands, I am focused on this developing head and shoulders to the downside. Any pullback here, therefore, is viewed as a potential opportunity to trade this as a right shoulder. And I am going to be looking down towards the next key of support to the downside at the 80.02. Okay, so the first market, which I do like going into next week, is Aussie franc. We did have this head and shoulders over here, which is broken with momentum. We pulled back and it got a bit volatile. I have been warning in previous videos, Aussie franc to the downside, New Zealand franc to the downside, they're not finished. This is just a correction. I expect these to roll over at some point and test the lows. Just as I'm currently saying, I expect, despite the volatility in DXY, that it will at some point in the near future, and this took a couple of weeks, but it will at some point in the near future make new highs. I do believe that. And we are now starting to roll over in Aussie franc. Any pullback in this market next week is viewed as an opportunity to look for bearish setups down to the 0.6208. Next is CAD franc. This is my second favorite franc pair to the downside, but look at how steep this sell-off is. If you go short on the Monday, you might find this snaps back quite viciously Monday and Tuesday. So wait for the pullback in these markets, especially because of that volatile move. But once we start to see this snapping back, this is going to be the opportunity to start to look for shorts into the 0.7061. And if we come down like this and test this and then bounce, I'm going to be looking down towards target 2, the 0.6993. Next is New Zealand franc. Again, I was warning this was just a bear market rally and we should be looking for further declines. We did, by the looks of it, double top over here, and now we're starting to work our way down. So any pullback in this market is viewed as an opportunity to start to look for shorts down to the 0.5512. As I've been saying for a while, I do believe there's a very good chance, higher probability, we're coming down to test previous lows in this market. So it does now look like we've got the green light on this market. Next is Aussie yen. Now I'm in the daily chart here. Why? Because Aussie yen is the most risk on, risk off currency pair. And this chart should give you serious pause for thought. We are now looking at a failure at the left shoulder. This is textbook head and shoulders reversal in the most risk on, risk off currency pair. If Aussie dollar is selling off, this is of course risk off, because you're seeing the Australian dollar, the most risk on currency, failing against Japanese yen, which is the most risk off. So again, put all of the pieces of the puzzle together. We are seeing volatility that, generally speaking, occurs around major market moves or crashes. We're seeing safe haven assets appreciating, in some cases, as much as they did during the actual crash of 2008. And now you're seeing a major reversal pattern in the most risk on, risk off currency pair to the downside, which is implying risk off coming into the markets. So heading into next week, not only am I looking to short this, but we've now broken the lows here. We come down and break this low. This confirms this double top. And if we break here with momentum, this is the kind of move you would expect to see during a crash, during a massive risk off event. Because usually what happens when you break the low over here, you enter third waves. That's what we're basically at. This is essentially a second wave when you have a head and shoulders. Just as this was a second wave, this was a third wave. If we get this to the downside, then you could see some real risk off coming into the market. So it's another indication that that sell-off in the DXY could be an illusion in terms of wider risk on sentiment. So dropping down to the 4-hour chart, you can see we've started to break out down here. We've broken the previous low. We are now starting to trend to the downside. Any pullback in this market is viewed next week as an opportunity to look for shorts. And keep an eye out for the break of this low, because if this low breaks with momentum, we could be starting a third wave to the downside. And this actually would be a sign you would want to hold on to any trades you get pre-break to see if you can catch a much bigger move. So I do really like Aussie yen. How this market trades at this low is going to be very indicative of the wider risk on risk off sentiment. And I believe we probably see this break with momentum. We see risk off coming into the markets. Next is CAD yen. Huge sell-off after breaking the lows over here. Again, if you get involved at the lows, you run the risk of this snapping back in your face. So wait for a correction, but any pullback in this market is viewed as an opportunity to look for shorts into the 101.76. Next is New Zealand yen. Also setting up a major head and shoulders reversal here in the bigger picture. And again, this would be indicative of a major risk off move coming into markets if we start to break down here. If we scroll in, however, you can see that not only are we forming the right shoulder here, but the trend has now changed. So we've got the right shoulder and the trend has now changed. We had a double top over here. We've broken the lows. This is a reversal pattern in and of itself. And any pullback here should be viewed as an opportunity to look for shorts down to the previous low over here, which is the confirmation point. This is where we should be looking for a potential break with momentum and a third wave to the downside, and then on to the 79.52. But again, if you break here with momentum, you might be looking to hold this longer term rather than taking profits at the 79.52. Next is EurAusd. Now EurAusd has started to break out of what looks like this big bull flag. I don't like the technicals on these as much as these markets here, so I do favor the franc and the yen pairs. Any continued pullback in this, though, is viewed as an opportunity to look for bullish setups back to the previous highs and then onto the 1.5839. Next is EurCad. We are breaking out of previous highs here with momentum. Any pullback, I'll be looking for this as a bull flag next week, and I'll be looking for setups into the 1.3806. Again, I do favor these markets over and above the euro pairs, but the euro pairs are certainly on the table as well next week. Okay, so wrapping up the currency pairs with the dollar pairs. Now, the dollar pairs are not markets that I'm really looking at trading next week, but I've added them in here just for analysis, just to see where they're at. You can see with euro dollar, what we've done is we've pulled back to the major breakout level of the 1.0343. And so if you go long euro dollar, you're trading right into not just that breakout level, but the previous area of resistance over here at the 1.0365. So I do think patience is required. We're right at that area where if we break through with momentum, you can be looking up to the 1.06359. But if we start to stall out here and reverse, that could well be the sign that the dollar itself is starting to bottom as well, as I believe will be the case fairly soon. Maybe not next week, maybe not even the week after, but in the near future. Next is Aussie dollar. Now look at Aussie dollar. We are making our way up to the 0.61240, but this is counter trend. This is what I was saying with Aussie franc previously, that it's likely to start to roll over, and it did. New Zealand franc starting to roll over. So I do believe, just as we saw those markets rolling over, I do believe Aussie dollar is, whether it comes up and tests the 0.6124 first, or whether it starts to roll over before that, I do think this starts to roll over and we're coming back to the lows in Aussie dollar as the DXY makes new highs. So I think if you're trading this counter trend, you might be chasing diminishing opportunities here. I much prefer the franc pairs and the yen pairs as a result. US dollar CAD took out the target to the downside last week, and you can see we're looking at the dollar pairs in the daily chart. We're getting to a point in US dollar CAD as well where, yes, maybe there is more downside because markets don't tend to just V-bottom like this, but if we start to pull back a bit and we come down and test the 1.3209, we're starting to test previous major breakout levels in US dollar CAD. And again, this could be where we start to see a bottom in this market. So be careful with this if you're trading them to the downside. And the final dollar pair is New Zealand dollar. We took out the counter trend target last week. Heading into this week, just like Aussie dollar, I do think we roll over to the downside fairly soon. However, if we pull back, we may come up and test the 0.6230. But you can see this is the previous high. So anything currently to the upside should just be considered an opportunity to look for the next leg down and a counter trend move. So I do think we could see these a little bit higher, especially next week, and the dollar down a little bit, maybe next week or the week after. However, be wary of trading this counter trend, as with Aussie franc, New Zealand franc, I do think this rolls over to test the lows in the near future. Okay, so wrapping up the video with gold, silver, and Bitcoin. Starting with the gold-silver ratio, we are trending to the downside, and last week I did actually favor silver over gold, and I still think gold and silver, if you are looking to trade dollar pairs, are probably the better markets to be trading. And I also think they could provide the key as to when the dollar could start to bottom and make a run to new highs. Starting with gold, and I want to look at these on the daily chart as well, just for a better view. We did take out the target set last week at the 1729.48. The next target to the upside is the 1807.16, and I think what we're going to see in gold, if we do pull back a little bit further, I do think we could come up, test this area here, and I question whether this key area of resistance is where we start to see gold rolling over, in which case I do think that could also be the bottom in the DXY if we start to get that and we start to see some reversal patterns in the DXY. So again, I do think there's a little bit more upside in this. I think the dollar comes down a little bit further heading into next week. Next is silver. I do also have a near-term bullish bias on silver once again. Any pullback in this market next week is viewed as a bull flag, looking for the 22.49. And last but not least, we have Bitcoin. Now look at Bitcoin, another market which, if we had broader risk on sentiment, you would expect to rally. And yet we had a big sell-off to the downside. Bitcoin is actually a short going into next week. And I question whether, if we put these things together, we get this correction in Bitcoin as the dollar comes down a bit lower, and as gold trades into that level, as silver trades into that level, and then we start to see the dollar bounce. Bitcoin comes to the downside, and we see gold and silver rolling over from those levels as Aussie yen breaks to the downside and we get risk off coming into the markets. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. If you enjoyed today's video, why not consider joining us during the week, where I share my charts as well as the setups that I'm personally looking at trading with members on a daily basis. And we also publish the scorecards for over 75 markets in different asset classes, including Forex, stocks, bonds, and commodities. You can find out more about the benefits of GMT membership by clicking the links in the description below and also in the pinned comment below. So thanks for watching. The only thing left to say is take care, and don't forget to trade safely.